I thought I would have a little fun with my presentation. So, Yo Mama is so bearish, and other erroneous beliefs about gold stocks or mining stocks for 2024. That's right. Your mama is so bearish. Okay, first of all, I understand why your mama is so bearish. That top chart, that is GDX since over the past 3 years since the COVID bounce. You remember we had the COVID crash, and then we had the COVID bounce. Some of us did really well in that bounce. But since then, this is what GDX, the Gold Miners Index, has done. It's down over 1/3. It's lost over 1/3 of its value just in those 3+ years. And then the bottom chart is GDXJ. You can see how far it's down since the COVID bounce. It's lost 45% of its value and is still down that much 3.5 years later after that COVID bounce. So I understand why your mama is so bearish. And here's the venture index. Look at the top chart. The venture index, where most juniors are that we all like to invest in, is down almost 50% since the COVID bounce. It's lost over half its value. And then the bottom chart, you may not have seen this before, but since 2005, you can see in the inset there, since 2005, the Venture Index Exchange has averaged over 1 billion shares in monthly volume. But look where it is now. It was less than half that at the end of 23, the last month of 2023. There's still no interest. There's still no interest in the sector. Now, it's popped up a little bit here so far in January in terms of volume. So there's some interest. Maybe things are turning. We'll see. But my question is, when volume is that low, what happens to the stock prices that we're all invested in when volume returns? Your mama is so bearish. Now, you didn't think I was going to have that kind of title and not have a few jokes in here, right? Did you? So, your mom is so bearish. When she looks at her mining portfolio, she says, to be continued. Yeah. Your mom is so bearish. She looks in the mirror and she sees a teddy bear. Your mom is so bearish. When she goes camping, the bears hide their food. Yeah, that's how bearish your mama is. Your mom is so bearish, she tried to adopt Smokey the Bear. Your mom is so bearish, even Hello Kitty says goodbye. All right. And the most important one, your mom is so bearish, she is not welcome at MIF, right? Yeah. All right. Okay, so why is it wrong for your mama to be so bearish? Okay, there's 3 reasons why I think that's a mistake and why she's off base, and she shouldn't be bearish. She should be bullish. Okay, erroneous belief number 1 is recency bias. So if you look at the gold stocks over the past 50 years, there's been like 10 different cycles. You can see them right there. So what this shows is how much gold stocks have sold. And this is gold stocks. This is not gold, okay? These are miners. We'd use 3 different indexes to gather all this data, but this is what it shows. You can see how far they sold off and then how far they bounced or rebounded after those big sell-offs. There's been 10 of them since the 1970s, okay? And you can see over there on the far right, we're down about 30%. We have not started a rebound yet, another uptrend yet. But my question is to you, what has happened after every big downdraft in gold stocks? The cycle reversed and it went up. We had major uptrends. In most cases, there were major uptrends. And what do you think investors said at the bottom of all those red figures there? I'm out of here. Gold stocks are never going to work. I hate gold stocks. It's never going to happen. And yet the cycle reversed and they went up. So instead of having a recency bias, my suggestion to you is to have a historical bias. Look at history. What does history say about this? And have that kind of bias instead. Erroneous belief number 2 is ignoring a generational opportunity. So you might want to buy gold stocks when they're low and that sort of thing, But that's not what we have now. What we have is the entire sector most of the entire sector has been completely beaten up, beaten down, taken out behind the woodshed, completely ignored. We have extreme oversold conditions. That's an opportunity you don't normally get. This shows the HUI, the gold stock index, and its ratio to the gold price. And you can see where the high was, you can see where the low was, and you can see where we are right now. We're near historic lows. Gold stocks, relative to the gold price, are near historic lows right now. Juniors are dramatically undervalued to the gold price. You may have seen this chart from Tavi Costa at Crescott Capital, or actually it's from Kevin Smith there. Explorer is extremely undervalued to gold. The gold price is in gold. The junior index, the venture index, is in blue. And you can see just how far off they are relative to each other. And you can see the inset there. The venture index would have to appreciate 548% just to get back to its 2007 high. Just to get back to its 2007 high. And my question is, what happens if gold moves higher in that transition period? What happens to gold stocks? Gold stocks are dramatically undervalued relative to the S&P 500. This is the HUI again, relative to the S&P 500. You can see the low there. You can see the high. You can see the current ratio. The current ratio is near historic lows still. Gold stocks relative to the S&P 500 are near historic lows. Generational opportunity. It also ignores the Fed's likely path of easing. So a lot of people have talked about this. All I'm going to show you is some data. So the gray bars are hawkish periods where the Fed was raising rates, okay? So the white periods are periods where they were easing or they were lowering rates or not raising rates. And then I listed simply what the gold price did in every single period of easing. And you can see what gold did. Of those 11 periods, it rose in 9 of them. The path ahead is more likely positive and supportive of gold based on history than it is negative. And gold stocks like easing. This is actually from John Hathaway. It's brought gold equity gains in the last 3 Fed pivots. When they stopped raising rates, they reversed and started lowering rates. This is what gold stocks did during those periods. And look at the gains. These aren't 20%, 40%, 400%, 238%, 208%. That's what gold stocks did as a group. That's not even counting some good stock picking. As a group, that's what they did in the last 3 Fed pivots. The Fed has already signaled they're probably going to lower rates this year, probably more than once. This is what gold stocks have done the last 3 times. It ignores the upcoming M&A cycle. We haven't seen a lot of M&A yet, right? So this is a cycle that I believe is going to come back. This is what John Hathaway Sprott said on the Marathon Gold takeover of Calibre Mining. Quote, in the information circular, it states that as many as 20 counterparties expressed potential interest in acquiring Marathon. 20 other companies were interested in that takeover. So I think a lot of those companies, like he says down there, are on the sidelines and looking for other opportunities because I think we all know that majors are going to need ounces. That's not really debatable. They're going to need ounces. So at some point, this is going to happen. There's going to be a significant cycle of M&A, and I think a lot of the junior companies that we own are going to be subject to that. So, but like I always say to the CEOs that I work with, 10x first, please. Erroneous belief number 3: stock picking can work. Now, those of you who don't know me, I do not beat my chest at all, but I did want to show you what I had, the gains I had in my portfolio in 2023. These are the companies, how much they gained last year. Snow line on the right actually includes 2022. But stock picking can work. Okay, so if you really focus on the best of best companies, stock picking can work. And they're not all going to do this. I have many stocks, like many of you, that have junior stocks that are down. But stock picking can work. We can beat the index. We can beat GDXJ. And there you go. There's GDX and venture gains. I just pulled some random out. So GDX is in gold. The gains from the venture index are in blue. Again, you can see these runs that these indexes have been tremendous. We're not talking 20%, 40%, 50%. We're talking double, triple, quadruple. And again, that's just the index. But what about a recession, Jeff? A recession is coming. For those of you who think a recession is coming, I remain neutral on that. Here's what the gold price has done in every recession since the 1970s. And you can see that the gold price has risen. Of the 8 times, it's risen 6 times. And the 2 times it fell were single digits. So a recession shouldn't really scare us. Besides, this is the most telegraphed recession in the history of mankind, but it's another discussion. But what about gold stocks, Jeff? What do they do at a recession? They certainly crash, don't they? I don't know. Here we go. The last 8 recessions, this is what gold stocks have done. Again, this is based on several indexes. But of the 8 recessions, gold stocks have risen in 5 of them. But what if the stock market crashes, Jeff? That's a good question. I'm glad you asked. The red column there in the middle is the 10 biggest crashes in the S&P 500 since the 1970s. And you can see how bad they are. Then the gold column is green means that gold rose during that stock market crash. Red means it fell more than the S&P. Yellow means it fell, but less than the S&P. And you can see there's a lot of green there. But I draw your attention to the bottom row of the average. The average crash in the S&P 500, it loses 1/3 of its value. On average, gold has risen over 19%. Okay, so here's where I'm at for 2024. For what it's worth, everybody's giving their opinion on that. But going into the year, what I see is an asymmetrical proposition. So first of all, I think gold does make a new all-time high. And I don't mean like what we've had before where it peaks its head above the all-time high and then comes back down. I'm talking about a new all-time high, sustainable, 21, 22, 2300, somewhere in there. Unfortunately, I think silver does lag. That's its history. For those of you who see my talk on silver, it's DNA. Its DNA is very clear. It has long periods where it does nothing, like now. It goes nowhere. It's boring, and then all of a sudden, boom, it ignites. Many times for reasons that we're not even looking at or thinking about, okay? So I do think that silver's going to lag gold like it traditionally does. But like it also does, it tends to pass gold and outperform it before that bull market is over. So that's what I think is coming, just maybe not right away. I think there will be a rebound in gold stocks. I think sentiment will improve. I'm basing that simply on history and the things that we've seen before, how bad sentiment is, how little of a shift it'll take for sentiment to reverse and become positive. I think when gold makes those new highs and is sustainable above 2100 or whatever it is, that's when we'll probably see a shift in sentiment in this industry. The asymmetrical proposition is that you have minimal downside risk relative to the outside upside potential. That's what I see in gold stocks right now, especially new ones. If there's new companies, like companies that are here, some of these companies that you might want to take a position in, it's relatively low risk compared to the outside potential because of where we are at this point in history. It's for this reason that I think stocks that would normally gain 50% will be doubles. I think doubles will be triples. I think there will be some very easy money that will be made when this shifts. I'm not saying it's going to happen today or tomorrow. I'm simply saying when it does happen, because of how beaten up we are, because of the extreme oversold conditions, you'll see what would normally be a double be a triple. What might be a 5-bagger will become a 10-bagger. I think I've got a couple here. Some of the best companies are here, in my opinion. I'm honored to be here with all my colleagues, newsletter writers. This is my first MIF, so thank you for inviting me. I wanted to invite a lot of other companies that are here, so I think we do have some of the best companies here. Stock picking will beat the indexes. We're stock pickers here. We're not going to buy GDXJ and just sit back, right? We want to look for the asymmetrical proposition, right? So stock picking will beat the indexes if what? If you own a basket, if you have your own GDXJ. Okay, this is the most important slide of everything I'm going to show you. What's going to drive the biggest returns for mining stocks? What's the number one factor to look for? Okay. Well, this company, Resources Policy, did a pretty big research project. They looked at over 300 stocks to determine, okay, why did some stocks just perform along with the industry, but why did some stocks outperform? Why did they outperform? Here's the quote. We parsed out the extent to which a mining firm's returns are driven by industry-level price fluctuations, and hence largely out of management control, versus by factors that may allow for more management influence. We found that industry effects drove the performance of average firms. However, company effects drove the performance of firms that captured the biggest gains. In other words, something that company did internally. In other words, a discovery or a significant advancement of deposit despite market conditions. That's why we did see some big gains in 2023, despite one of the worst periods of sediment in mining stock history. GDXJ will capture industry effects. If you want potential outperformance, stock picking should focus on company effects. Companies that are going to drive their company forward regardless of what's happening. For those that don't know me, we just started the Paydirt Prospector. We have a bunch of companies in there. There's more coming. You can subscribe quarterly or annually. One thing I'm doing there is, it's not real expensive relative to others, but it's just going to focus on mining stocks. We're not going to talk about the Fed. I'm not going to talk about interest rates, the economy, even usually the gold price. Just mining stocks. That's all I'm doing. Just mining stocks. That's all we're going to be talking about. And then Paydirt is here. It's in physical form now. It's actually for sale out front if you're interested, but you can get it in digital form on the website. You can get it on a reader, like a Kindle or something like that, or a physical. They are being offered for discount here for cash if you're interested. So again, thank you for having me. And your mama should not be so bearish, all right? You heard it first here. So, okay.